Morning, guys. I just wanted to quickly share my daily outlook. I have two pairs on watch for today on main watch, and I have two more on a slightly looser watch, which is Euro Aussie and Kiwido and Korea. So I'll just quickly start off with the DXY and about the DXY. Yesterday we followed through on last week's momentum, having had the previous daily candle, which was Monday's candle, just stall after a gap. So we followed through with momentum to the downside. At the moment, we have interacted with potentially our last main area of value with regard to potential longs. If at all price is to move back into this hook point value area all the way above read on, then high chances this is where it holds. If it doesn't, then we end up getting a slightly deeper pullback or a larger continuation structure at this area to warrant that next leg further to the downside. And so how will I potentially be looking to play the DXY? If you drop down to the 4 hour on the DXY, I really like the fact that we broke this low with a significant amount of momentum. And why is that? That is because of the mass psychology involved at this area. A lot of people right now are following into this sell-off because they missed this entry over here, they missed this entry over here, potentially in the dollar-related pairs as well. They missed this as a scaling over there, more or less an AFT scaling from just beneath those lows to the left. And at the moment, they can see that potentially this trend is following through, having broken that low, where we are now looking to form a series of lower low following this. And yes, it does make sense, but the only way I'd look to play this is if price was to come back all the way into this area as a reaction to that low that it has triggered, or rather that it has tapped into, before we then start looking for those continuation structures further to the downside. An alternative play to that would be the DXY holding at this area, and we end up getting a significantly larger continuation structure at that level to warrant that follow through. So that is all I'm watching on the DXY. So as of the moment, I'm just waiting to see what price ends up doing, having broken that low. So just some patience advised on the DXY. For JP25, we are potentially just stalling. I just think that this will end up being our main area of interest. Let me just mark it on that right there. And even if we are to sell off, I doubt this would be direct. I honestly think that this will move down quite correctively before we then get that next leg further to the upside. I wouldn't be shocked if that is what we end up getting, but still patience on this, and we'll see. So that's JP25. So on to the pairs that I have on main watch for today. First off is Kiwi Swiss. For Kiwi Swiss on the daily time frame, what we can clearly see is the fact that we have this area of value above where price just hooked back up. We ended up accumulating volume over there, as you can clearly see, which was more or less accumulation to warrant that sell off to the downside. I like the sequence in this where we are moving with quite some nice structures. Yeah, a nice running channel. We broke that low, and at that low, you can see that a large part of this continuation structure that has formed is just beneath it. So high chances we end up following through with the trend, or if this is to fail, we are sat at an area where it could potentially fail, and we could seek out this area in an attempt to seek out more liquidity. So zooming in, what can I clearly see? I like the retrace candle on this. We did attempt to pull back all that momentum, having opened with quite a gap. That gap was filled, as you can clearly see on that candle. We did follow through to the downside with yesterday's candle, which is something that I really like seeing. But the catch at the moment is the fact that if I'm to extend this, we are sat at that trend line, and I have always. I remember one of the first lessons that I learned while starting off to trade is avoid trading into the trend line. So even if we get a continuation structure over here, it could potentially look like a hover, as we can clearly see, which is okay. And I'm not saying that we can't play this, but risk I will be quite cautious with how I'll be looking to play it. An insurance entry ought to be the best thing, but also a risk entry does make sense given that we're also sat beneath this low So quite neutral on this pair at the moment. And why is that? Because you can clearly see that if you look left, we have that low that was taken out, a small gap that was filled over there. So if we eventually end up breaking above that hook low over there, that hook low over there, then I'll just be looking for that price to push further to the upside. An alternative would be a deliberate continuation structure, an hourly continuation structure over here to warrant that drop off, even at least into this area for around, we'll just size that up, dropping down to the hourly. Something that I do like is, if I'm just precise with what I meant, you can see the gap that was left over there that has been filled. At the moment, I am quite interested in that mini high, or rather that lower time frame area value. That is, if price is to break above, then I'll just look for a small continuation structure, preferably on the 15 that can be filtered down to the 5 for me to take a risk entry or a reduced risk entry, given what will be relevant to the upside. I also like the fact that there is some aspect of mechanics in this, where we can see that the first potential hook point, or rather just inflection point to the left that is set above that broken high, which was also the start of that corrective drive into that area, or rather into a third touch of this continuation structure. You can clearly see that that as a mini area of interest was taken out, but we still left a gap into these areas over here. Now this high was again taken out, and that gap was essentially filled, as well as that mini gap over there. So I do like the fact that there is some essence of mechanics in this, and we have that as a potential structure that will also play out. Yeah. So it is also worth just noting that. An alternative to this, which is more or less now my probable play, would be this area also holding, and you end up getting a very deliberate hourly three touch continuation at that level. Yes, it is also sat at that area, but I do like the fact that it is sat as if it is breaking through that area. So that as a risk entry is still okay, though on the higher side of risk, that I do understand. So I won't basically entertain anything on the lower time frame, say the 15. Sorry, say the 15 or the 5. I'll only take an hourly retrace candle over there, something deliberate enough. So that's my outlook on Kiwi Swiss. Next up, we have pound Swiss, more or less Swiss dominated watch outlook today. So for pound Swiss, nothing too complicated with this. We can clearly see that if you look left, interacted with a lower quality value area, or rather just an area of value and not the main area of value. At the moment, we did react to the upside. I don't really need that right now. I do like the fact that we also have some element of mechanics in this, with that wedge interacting with the hook point to the left to push to the downside quite aggressively, impulsively, if I might say, which is something I really like. The daily did follow through, we broke past that area over there. There were a couple of trades over in this leg over here. I missed the first one. We did get the second one over there. Ended up taking 1% out of a possible 3%. My bad, but I did basically manage that trade how I saw fit at that moment. But fast forward to today, what am I looking for? I'll just hide this, but still, that is exactly what I am looking for. I'm just looking for this area to potentially act as my first touch, that as my second. So if we were to move away correctively, it is something I'm looking for, and we come back for a potential third touch. Now that is beautiful. That is all I'll be waiting for me to potentially look to capitalize on that sell-off from point A to at least 90% of this overall range that we are looking to play. So yeah, that's that on my two main pairs, or on the two pairs that I have on main watch. The other two that I have on loose watch for you, Aussie, nothing too complicated with this. I just want to see how price ends up evolving or ends up moving, given that we already reached above the area that I was more or less interested in. So if we end up getting price even just sell off ever so slightly, and we end up getting price come back up to fill that, then that is what I'll be entertaining for a potential one touch, two touch, and a third touch. So potentially that ascending structure over the interacting with that push down. If we end up getting an insurance entry, well and good. The risk entry on the 4 hour, well and good as well. So that's my rough outlook on Euro Aussie for QEN is also clear that that is part of the 1-2 and part of that continuation to the upside. So this feels like more of the origin, but again, just focusing on the area that is more relevant to me at the moment, which is this area just above. So that is all I'm looking for on Kilian, at least to play that to the downside as I illustrated. Nothing too complex with that. You can clearly see that we have the impulsive move up, we have the corrective move down, more or less the middle section. So if we get that as a completion of that structure, that would be beautiful for us to capitalize on potential JP on the potential of the JP225 also moving to the downside as clearly illustrated over here. So yeah, that's all the pairs that I have on